A lot about lower tax refunds so far this year following those changes to the tax code. But new numbers released today indicate the opposite.
The IRS is reporting as of today the average tax refund now $40 higher year over year. Julie Watt's here to kind of clear up some number confusion.
What's going on, Julie?
Yeah, well, the IRS is urging people not to draw any conclusions from these numbers. They say, they're going to fluctuate week to week. And bottom line, there are so many tax changes that it's going to impact everybody differently. But as for those folks who've been outraged by news of lower refunds, the experts say, while getting less than you expected can temporarily put you in a tough spot, smaller refunds aren't necessarily a bad thing.
Jennifer and Dan Yoon were counting on their tax refund to help pay down their debt.
Some years we've paid bills, some years we've used it for fun.
Their past refunds range from $500 to $6,000, but this year
we owe $5,000.
That's astounding.
And they're not alone. Changes in the tax law capped or eliminated major deductions, including state and local taxes like property taxes and miscellaneous expenses like many business expenses. That meant Dan could no longer deduct work expenses like union dues, tools, or gas.
There you go.
In 2017, we were able to deduct over $66,000, and this year, $24,000.
But one of the most common hits? Yoon didn't change her paycheck withholdings. You see, the tax law changes moved most people into a new tax bracket. As a result, employers automatically begin withholding less tax. People who have too much tax taken from their paycheck generally get a refund at the end of the year. Those who have too little withheld end up owing in April. Yoon's employer withheld $23,000 in 2017, but just over $20,000 last year, meaning she got more money in her paycheck, less in her refund.
We want to make sure, based on your unique situation, that you're withholding the right amount of tax so you avoid a big surprise.
The IRS's Rafael Trujillo warned our viewers back in April that many people would be surprised by their returns this year if they didn't do a paycheck checkup. The IRS withholding calculator can help you determine exactly how much to withhold based on new tax brackets.
So using this tool will help you see if you need to submit a new W-4 to your employer.
Something many like Yoon failed to do this year. But Trujillo stresses the taxes you pay and the refund you get are two separate things. So just because you didn't get a refund doesn't mean you paid more taxes. It likely means you got more money in your paycheck.
Now is the time to head to that IRS website and do that paycheck checkup for the next year. But you might want to think twice before increasing your withholdings just to get a refund next year. Technically, you should be breaking even. A refund means you've basically given the IRS an interest-free loan all year. And some experts say you may be better off taking the extra money from your paycheck and investing it in a high-interest account. Then you can use that extra money to pay your taxes at the end of the year.
That's one way of looking at it, right?
All right, thank you, Julie.
And we wish you well. It's your last day here, so we will miss you.
I will miss you guys. I will miss everyone out there, yes. But I will still likely be on the air here. I'll just be reporting from our CBS station in Sacramento.
Good.
All right. Good luck,
Thanks.
Jules.
Thanks.